talking about love takes a little bit of time. So let's just talk about the L, the U, and the V. So the L is you drop down and you don't really get much of a recovery. Japan is everywhere. What's happened in Japan? Low inflation for a long time to come. And then your net investment position would mean a lot. Who owns you? Because money will come back to mama in that case. The U, which is kind of what you're talking about, it takes a time for the recovery to come. Now, at the bottom of the U, you keep thinking it's a V. No, it's not. It's a V. No, it's not. And that's what we're talking about. We're still risk on, risk off at the moment. But a V doesn't just bottom out nice and easy and go up. At the bottom, you keep having these false dawns. And that's what you were talking about, is that, you think it's a V, it's not a V. And that the U at the bottom is very jagged, like a sawtooth pattern at the bottom. And you keep looking for recoveries that aren't there. And there, your fiscal position will mean a lot because governments are pushing for this recovery. And if it doesn't come, you push, and eventually, where's the money? So those, like even Australia could do quite well in that scenario because it's got, a very good fiscal position. And the V, we all know. The V, we all know. That's what everybody wants. But as you said, it's going to be very difficult to achieve. Of course, going from a PMI of 10 to a PMI of 30 is going to be easy because it can't really go down much. I mean, we saw one last night, I think, from Malaysia at 27. So you are going to get something of a bounce. There's no doubt about it. But a 30 is a L. So this is the problem. So we're trying to say to everybody, look, think through if it's an L, if it's a U, if it's a V, if it's an exclamation mark, which is a Great Depression. What are your strategies? Get them right lined up in your brain. Get them thought about before. Don't try and guess which letter it is. Because if you know which letter it is, you're a winner. But work out what are your strategies under each scenario and then try and work out what scenario we're in.
David, you mentioned humility, less conviction in the report. I wondered whether you'd written it. But jokes aside, I wanted to ask you about the US dollar because in case the audience missed it, you've been a big supporter of that currency. I noticed it's not an all-weather currency, though, if you look at your report. It doesn't fare particularly well under all scenarios.
No, it certainly doesn't fare well under the V, which we saw last month, like a blistering 6-7% rally in the Aussie while equities were bouncing back up. So certainly doesn't fare very well in the V. It shouldn't fare very well in the L because its net investment position is terrible. I mean, the US, everyone owns the United States and has the ability to sell dollars, but its liquidity structure saves it. If it wasn't for its liquidity structure being a reserve currency of the world. And so we're not sure. It should do badly in that scenario, but is it the go-to currency? So no, the dollar doesn't do well in all these scenarios. And in the exclamation mark, where you go like a double dipper, the Spanish flu where the second wave was much greater, and please goodness that never happens, but that's gold because then you start asking yourself a question about fiat currencies, money, what are central banks going to do? So not all the scenarios the dollar does well. That's absolutely correct. And it's been smashed recently a little bit because people believed in the V. And as Jeff said, well, the V is the bottom of the U actually. And everyone goes, oh, I'll buy my dollars back.
David, very good morning to you. I think I can just about hear you on your dodgy connection. Now, look, listen, what about the plumbing of the system as well? You mentioned a little bit about liquidity there as well, because we've seen plumbing already last year, problems in the repo market. We've seen plumbing problems in the oil market with a huge negative settle of that May WTI. Is there any plumbing problems in your world, in FX?
Well, not really, because the Fed comes in with a cross-currency swap. So what was happening was it was starting to build. So what countries were doing was saying, I need money. My currency is selling off 20% this year, 25%. I need money. So let me sell my treasuries on the long end and buy the short end and get ready. I'm ready. And that started disrupting the treasury market. So the Fed said, look, give us your treasuries. We'll give you the dollars. When this is over, you give us the dollars back. We give you the treasuries. The swap. So the cross-currency swap with the Fed acts like a pawn shop. So basically, no, the Fed has solved that because on the financial crisis, they learned how to deal with these problems, that in the FX world, things are look, you might not like the valuations, but it's trading, it's liquid, it's open. But for some currencies, it's starting to put so much pressure on them, they're going to ask themselves, what are we going to do about it? Because some countries don't have the ability to go to the Fed for the swap market, some of the smaller emerging markets. And for them, it may become a lot more problematic.